Hi there folks, it's Matt Hayson here looking at everything impacting the property market this week. Well, it was a big week for the property sector, and the reason being, well, we've all become inflation experts. It was the one big piece of data that was released on Wednesday and would have a major determining factor on what move the RBA would do when they meet next Tuesday. A higher inflation level would almost mean with certainty the RBA would be under pressure to lift the cash rate. Anything less than that and perhaps they got a reprieve. Now what unfolded? Well, the inflation level came through at expected at 3.8%, but the trimmed mean inflation, which is the key data that the RBA really look at, that has fallen from 4% in March down to 3.9% in June. Only modest, but it's pretty big news for the RBA. So what does this all mean? It means the high rate environment is having the desired impact in cooling inflation and the overall economy. Outside of the cash rate, we can see a sharp downturn in overall economic activity as well. Even this week, you've seen major companies like Rex Airlines going into administration. So this latest inflation news has completely shifted the economic mood. In fact, following the data, the share market rallied to have its best day since 2022, and any talk of a cash rate increase has completely been wiped off the table. In fact, it's been replaced with a chance of cash rate cuts. In fact, money markets have now factored in a 40% chance of a cash rate cut in November and fully priced in a cash rate cut in February 2025. And the property market really did need this little bit of positive news. I wouldn't suggest that the market is in dire straits, but we certainly needed a little boost of confidence as we now stare down the barrel of looking to launch spring campaigns. And we can see with the latest CoreLogic data, to close off the month of July, Sydney values have just eked out a little bit of price growth at 0.3%, up 1.3% for the quarter. But in Melbourne, property prices there are in reverse. Also, the auction clearance rate remains pretty nervy, sitting at 52.2% to close off the month. So this latest economic news around inflation is good as we approach the spring market. It's also good news for those who are looking to purchase, homeowners and owner-occupiers, and of course, the overall property sector, which leads us into this weekend, folks, where we are excited to launch a number of incredible new properties, and our entire team looks forward to seeing you out and about. Thanks so much for watching, and I'll catch you all next week.